Welcome to our mining pitch battle, which is our first mining pitch battle of the week, and is part of our Minds and Money online global June show, running from the 22nd of June to the 24th of June. We have three great contestants today who are Aurelius Minerals, Vanstar Mining Resources, and Northisle Copper and Gold. And we will be having four investor judges whose job it is to evaluate which project they like the most and why, and which project, if they hypothetically had $1 million to go and invest, they would go and invest in. And to help me today, our four investor judges are Miranda, Werstiuk, Corporate Development Director for OCIM Precious Metals, David Bellingham, Managing Director for HCF International Advisory, Florian Grummes, Managing Director, Midas Touch Consulting, and Joe Mazumdar, Editor, Analyst, and Publisher of Exploration Insights. Just before we start, just to briefly go and run through the rules. Each mining company will have 3 minutes to pitch. At the end of their 3 minutes, we will go into 8 minutes rapid Q&A from our four investor judges. We'll then go on to our second contestant, then our third contestant. And at the end of that period, I will ask each of the four investor judges which of the three mining projects they would hypothetically invest their $1 million into and why. So without further ado, I think if I just invite Mark Ashcroft, if you'd like to go and get your slides up on the screen. If you just do a screen share. So, Mark, your 3 minutes starts from now.
Thanks very much, Andrew. Welcome everybody, Aurelius Minerals, to the pitch battle. Investment thesis: Nova Scotia, emerging gold, Canadian gold camp, significant upside. We have advanced assets. We have a path to production, our Aureus East asset. Following the FNX mining strategy, underexplored, unloved, misunderstood assets, significant resource base and resource growth, and great infrastructure in province. The path to production is pretty simple. We have a permanent gold project in Nova Scotia, but without the resource. So we need systematic and intensive exploration. Got just over 2,500 meters of accessible underground workings. All the access utilities for a 300 ton per day mill. And our goal is to define, refine, and re-engineer this asset. So we define that maiden resource, refine that into a reserve, and then take that forward to the feasibility study using economic and engineering applicability. And our goal is to have our first maiden resource Q1 2022. It's a very long mineral structure on the Aureus Gold. The East project is about 4 kilometers long. The West is about 6 kilometers long. So in total, 10 kilometers. Offset by a fault about 1 kilometer. High-grade gold has been confirmed on the East and the West. The East has the underground infrastructure. The West is a near-surface open pit target. It's a big system, and our view's evolving. Every time we put a drill hole in the ground, we see something new. And what we've got is we've got a hinge zone and limb system, but that's becoming much more extensive than we originally thought. Those hinges widen as we go to depth. We've got drilling down to 900 meters at the East project, but we're starting to identify those limbs, which were traditionally thought to be only 5 to 10 meters long, extending down beyond 100 meters. So we're really developing an opportunity to bulk up that mineralization, because we're seeing the gold in between, in the sediments between the quartz veins. And here's just some great examples of the visible gold we're seeing. We're seeing very homogeneous distribution of coarse gold, which is not the classic nugget effect. We see the gold at the quartz sediment contact, visible gold in every hole, and every hole we've drilled to date has hit visible gold and has hit mineralization. You'll see we start a quartz system up on the top here, where we typically see the high-grade VG. Here's a great example: 182 grams per ton over 65 centimeters. Yet we assay the entire hole, so we know what the content is in the hole below that in the sediments. So we don't smear, we develop a gold zone for our methodology. And you'll see there we have about 14 grams per ton over 9.5 meters. Hole 2 starting at 174 grams per ton over a meter, but the mineralization to the bottom of that runs about 11.5 grams to about 11.5 meters. So it's very extensive.
Mark, thank you very much for that. Your 3 minutes is up. So fantastic presentation. Without further ado, I would like to go and throw the floor open to questions from our 4 eager investors. Who would like to fire the first question?
I'll go first.
Okay, Joe.
Joe. Just sorry. Hey, Mark. Yeah, I saw that you're talking about a maiden resource. Is there already a resource? Because I saw something about 427,000 ounces at 6.7.
We've got four projects in province. 3 of them have current 43101 resources. The east has a historical resource, but it's not current to 43101, Joe.
Okay, so does this 427,000 ounces play into what you're upgrading for what you're calling your maiden resource, or is it something completely different?
That's actually there's about 270,000 at our Forest Hill project, about 96,000 at the Tangier, and 50,000 at the west. But we don't have one in that. Those numbers aren't in the east. Okay,
so your maiden resource is something completely new.
Completely new. On top of those, yeah.
All right. Well, I got more questions, but I'll give it up to
Miranda.
Yeah, Mark. How much cash do you have on hand, and what's the can you get to your maiden resource and plans beyond that?
Yeah, that's the plan. We just we were pretty lucky, and we managed to raise $6 million, combination of hard and flow through, just at the end of May. We had actually commenced phase 2 drilling ahead of that. We're planning to drill up to 20,000 meters by the end of December. About 10 to 15,000 of that will be on the east, where we'll aim for that maiden resource. And we're going to throw the balance of that onto the west. Once our surface drill is finished on the east, we'll move over to the west. I guess our burn rate currently when we're drilling, so we work a 28-14 campaign because of COVID. So our rough burn is about $400,000 a month down in Nova Scotia, and then we have about 120,000 corporate burn on top of that. So the current treasury should be satisfactory to get us through that program. Yes.
Okay, thanks.
David or Florian? I mean, maybe yourself first, David.
Sure. Thank you. Great presentation. With regards to your path to production, so what is it going to be? I guess you've got to go through a resource definition phase, which is a larger resource than you've got. Then we'll go to PEA and PFS. Can you just outline what are the stage gates for you to, first of all, start a resource examination and then go through your various studies to build this thing?
Sure. So I think, firstly, I'm a mining engineer out of Sudbury, Ontario. I first went underground when I was 12. So I'm a 6th generation miner on my dad's side. Started on a jackleg when I was 18, and then paid my way through university as a miner, and then managed to play some rugby union in the UK and got a master's in finance and spent 10 years on the dark side in banking. So bringing that skill set together along with my team, we're really into the risk mitigation steps. So for instance, we've got Jeremy Neby on the VP, our VPX. He's got a history of working on underloved brownfield assets. For instance, Romero in the DR, that was 300,000 ounces approximately when he was there. And they took that up to about 2.5, including an investment for Magnico. And I also brought in a mining engineer to be our general manager on the ground in Nova Scotia, came out of the Goldcorp Newmont camps. And he works intimately with the exploration team to sort of de-risk yet accelerate our steps towards developing the resource, because we want to identify any deficiencies early, so we're not having to go back from a confidence perspective to infill drill more than we would need to. And also, as we're developing our models and looking at our shapes, we're able to start looking at mining methodologies, because as these limbs develop, which traditionally weren't understood or even mined, we're certainly seeing as engineers an opportunity for multiple methodologies to extract that material, if we can, of course, build this resource up substantially. And I'm pretty confident on that thus far. Like I said, every hole we've drilled on all of our projects has hit mineralization thus far.
So when you do your first 43101, what will you expect to get when you delineate that resource?
Yeah, I think we're certainly looking for, we're certainly looking for a few 100,000 ounces. That would be Q1 2022. And then let's say give us 3 months after that to produce a PEA on the back of that as we continue to drill. Then we'll certainly look for a resource update and roll through for a reserve and, either a PFS or FS by Q2 2023.
Okay. Can I perhaps bring in Florian from Midas Consulting? What questions do you have for Mark?
Yeah, I actually would have had similar questions, but one thing that I still have not really understood well, you said you're burning basically 500,000 per month and you have 6 million in the bank. So that will basically force you to finance again in 12 months.
Sorry. Yeah, we've got the combination of the flow through funds and the hard dollar funds. So the exploration will stop before the end of that 12-month period. So then we'll just roll down basically to our hold costs and the hard dollars. But it does roughly get us into 2022. Yes.
Okay.
Yeah.
Okay. Joe, I think you had a few more questions you wanted to ask Mark.
Yeah. So with your resource, how deep are you going to take it? Because I can see some of this stuff goes down, like 750 meters below surface. Is that correct?
Actually, that was 750 from the bottom of our of the current excavation. So it's almost 900 meters from surface. But that's a really valid point, Joe, because where we're really looking for the opportunity is the lateral extension, because it's much easier to access lateral mineralization than having to go for that vertical extent. So we'll certainly put in the occasional deep hole to confirm that the mineralization continues. Probably not down to 900 meters because that's expensive in the efficiencies, but I'd certainly say we're looking to target probably in the neighborhood of, about 500 meters of depth from surface.
Okay. And seeing is this a new revelation? Sorry, new revelation, that's redundant. The revelation that you've got thick intersections of grade in the sediments?
Yes.
But that would change your cutoff grade and everything you're thinking about, no?
I think what's really important is that the past operators, and this is again what we're seeing from our own drilling, our highlight was for me was seeing 0.5 meter of 21 grams per ton in the floor of the drift that was excavated for the bulk sample right below the drill pad. And what we're seeing is intersections from historical core we found that had never been sampled, let alone assayed. And we're finding that 2.5 meters into the wall of the drift, a meter of 28, 29 grams per ton. And so the last way of thinking was that you had the random gold, the nugget effect in quartz. And so they left a small skin of quartz in the drift floor so they didn't extract any of that waste sediment material. All of our indications, and zone 9 is a great example. And those were the three images I showed where we had that VG. That VG is occurring at that quartz sediment contact. So in my mind, it'll change the horizon that we're actually accessing. We'll leave a nice, a nice roof of quartz as we try to, extract that quartz sediment contact, because that's where, the majority of this coarse gold seems to occur.
Okay, excellent. Okay. Well, look, thank you very much for that, Mark. Thank you for being our first willing contestant. And again, best of luck, fantastic project. And we'll go and find out later whether you've gone and won this virtual $1 million. But without further ado, let's move on to our second contestant. Our second contestant is JC St-Amour, President and Chief Executive Officer of Vanstar Mining Resources. JC, the floor is yours.
Thank you. Vanstar Mining is a Canadian-based low-risk gold exploration play focused in the province of Quebec, Canada. I say that we're a low-risk exploration play for three main reasons. One, we have a strong flagship asset with a great joint venture partner. I believe it's the main reason why investors buy Vanstar stock, and I believe it more than supports our current $40 million market cap. Secondly, we have a number of exploration assets that investors essentially get for free, and that would provide significant upside on any kind of exploration success. And three, we have we're in a strong financial position and have a tight capital structure. Our $5 million in the bank more than supplies enough funds for exploring our assets, as well as reduces our risk by providing a cushion so that we don't have to access the markets at any inopportune time in the future. The Nelligan project itself is a joint venture with IAMGOLD. Vanstar has a 25% interest in that project. IAMGOLD can earn another 5% by completing a feasibility study, which would leave ultimately Vanstar with 20%. We are fully carried on this project all the way to production, so our shareholders do not have to suffer any dilution to advance our flagship project. The property does contain a world-class resource with a 3.2 million ounce resource grading just over a gram as of 2019. That resource is growing, and in 2020, the drill program expanded the resource there, or at least the mineralized zone, by 700 meters beyond the existing resource. And the 2021 program, which is going to get underway in the next couple of weeks here, will continue to expand that resource as well as provide some resource upgrades with infill drilling. Outside of the resource, on the broader joint venture property, there's a number of targets that have been identified with till sampling and geophysics that will be investigated further with drilling, and will provide some additional upside potential on that property. Beyond that, we have 4 exploration projects that we own 100%, the most advanced of which is our Felix project, which we plan to drill in the next few months here, with a nice target in a folded iron formation. And then beyond that, just in general, Vanstar, I think, is in a good position to make some acquisitions. If we can find another target, another project that can be a flagship for us, we'd entertain acquiring that if we can make a deal on on favorable terms for our shareholders, accretive transactions, basically. That's Vanstar in a nutshell. If you have any questions, feel free. So.
Well, I have to admit, that's in terms of timing, the timing was impeccable. That was 2:59 and 0.59, so it was bang on the money, sort of like a JC. So let's kind of go straight into the Q&A. Perhaps I can go to Florian from Midas Touch Consulting first. What questions do you have for JC?
Yeah, JC, thank you so much. Very interesting. I assume that IAMGOLD will develop your flagship project then, right?
That's the plan. They are completing a drill program this year. Their intention is to update the resource later this year, by the end of the year. I would expect that we'll see some significant resource additions, and beyond that, I think they'll continue to advance the project, move it to feasibility, and ultimately to production. So. Okay.
Any significant shareholders in your company?
We're fairly widely held. There's maybe one institution that has 4 to 5%, but primarily we're retail held. There's a number of individual retail holders that own anywhere between 1 to 4%, say, but generally we're widely held. So.
Okay, thanks.
Who's next on the questions?
Yeah, I've got a question. So, what's the confidence level of your resource at the moment?
It's currently an inferred resource, and I think with the infill drilling that's been happening in the past year and this year, we'll see an increase in the confidence there. I'd like to add that IAMGOLD caps the resources, caps the drill results in terms of grade, and so I think from a confidence in the resource perspective, it's a high quality calculation. So.
Okay, and the metric you were saying you're undervalued. Your market cap is 40 million, and you've got a 3.2 million ounce resource, which you own 25% of. What is the key metric that shows that you're undervalued?
Well, for one thing, we're carried all the way to production, so we don't have to dilute like most companies do to advance their projects. If we compare, say, our value to on a $1 per ounce, given our $5 million in the bank, our enterprise values is I think quite reasonable compared to our peers. And we can see similar projects out there that have significant NPVs on their projects, and I believe that we can at least get similar types of numbers with the Nelligan project, which is fairly straightforward.
Okay, and any metallurgy that's done on Nelligan so far?
There's metallurgy being done this year, so we should see some kind of results from that over the next sometime this year. So.
Okay, thank you.
Perhaps I can bring in Miranda. What questions do you?
Just a quick question, JC, with the 5 million in the bank, can you just walk me through, is that the bulk of that is going to go to the Felix, the work on Felix, because of the relationship with IAMGOLD? What are you going to spend that $5 million on?
Yeah, so for Nelligan, we don't have to spend any money. Of the 5 million, just under 2 is flow through. So we have to spend $2 million in the next by the end of next year. We'll be spending that on our existing assets. So Felix will get some of that. Depending on results, we may up the budget there or move on to something else. We are also looking at other projects that we can bring on board to that are sort of more advanced that we can spend some money on as well. So between the 4 projects that we have, plus any potential targets, we'll find a place to create value for our shareholders using that flow through.
Thanks, JC.
Joe, what questions do you have for JC?
Hey, yeah, JC. So on Nelligan, we're seeing a lot of these low-grade 1 gram things being developed. I mean, Equinox took Hard Rock. You got Cote with what's that? IAMGOLD as well, and you've got Magino and Argonaut. In terms of your shareholders, I guess you don't know them very well because you're widely held. Are they leaning more towards you doing exploration, or do they just want you to hold on to your 20-25% to monetize that in the future as you go into feasibility study? Because 2 ways to add value is de-risk and then add resources. So do you have a certain amount of people that just say don't burn anything and just hold off?
Yeah, there is a diversity of opinions out there, that's for sure. We do know, by the way, that I mentioned that there's a small number of retail shareholders that own significant positions. So there's probably a half dozen to a dozen investors, retail investors, that probably own 20 to 30% of the stock. And of those, some of them do feel very strongly about Nelligan and feel we shouldn't spend money on anything else. And others are quite open to the possibility of adding assets and growing at our own pace, something that we can advance ourselves. We do have the $2 million, as I mentioned, in flow through, so we do have to spend that no matter what by the end of next year on exploration. So we are looking from that perspective on how to best deploy that and how best to create value for everyone.
So yeah, because I saw your share price performance and you dropped off a bit of a cliff, 20% when you reported results from the Felix. And yeah, you were saying in the news release that it was in the meta sediments, not the banded iron formation. So how did that drilling work out? Were you thinking that you were going to hit the banded iron formation and didn't hit it? Or were you thinking that meta sediments might be mineralized?
It was a totally separate target. It was a target based on a historical hole. We never promoted that program very much. We just said we're doing it. I was careful to say that the old results may actually not. We were testing to see if they're real or not. They may not be real, and so I think the reaction from the market was an overreaction. Yeah. I think, like I said earlier, I think most of people buy our stock for Nelligan, and if we have any kind of success on the exploration side, I think our shareholders will benefit from that. But we shouldn't necessarily see a drop off if we don't have any success, because it's not like we have to go to market anytime soon. We do have a lot of extra funds that we can deploy to other projects. So in that sense, that's why I believe we're a relatively low risk exploration play.
Okay, just lastly, I mean, in terms of timing to potentially monetize, or whether IAMGOLD takes your position out, or the company, is that, you think, closer to when you get into feasibility stage, or do you get a bid by a private equity firm that says, "Oh, I'll take a bit of this"?
I think that would be, from the IAMGOLD perspective, I think this is my own speculation, but I think that they would want to see some economic numbers before they make any kind of decision, especially internally, and get it up the food chain to approve it. So I think it's after a feasibility study is done, and they'll decide at that point whether they continue to build it or whether they buy out the 20% position.
Okay, a last question, sorry, a last final question. Do you expect a scoping study before that?
It's quite possible. IAM Gold hasn't stated their intention on that front, but I think after this season, after updating the resource, they'll start to move towards some kind of economic study. So either a scoping study or a preliminary economic assessment or something to that effect. Okay.
Absolutely excellent. Okay, I think in your interest of time, you've just reached your 8 minutes. So JC, that was a fantastic presentation, and really do kind of wish you the best of luck. Last but by no means least, our third and final contestant is Sam Lee, President and Chief Executive Officer of Northisle Copper and Gold. Sam, the 3 minutes starts now.
Good morning. Thanks very much, Andrew, and thanks for this opportunity to present Northisle Copper and Gold. So from our perspective, we think that there are 5 key considerations for investors to think about when buying shares of an exploration and development company. So first is obviously the commodity exposure. We believe copper is the leading commodity for the systemic shift towards growth and electrification around the world. During the last 20 years, I was a managing director at a leading investment bank and worked over $100 billion of transactions in the mining space. And I understand that the strategic companies and investors alike will flock towards high premium copper in a peak metals environment, which I feel is not far away. Goldman Sachs estimates there's about an 8 million ton copper deficit looming by 2030, which is approximately the production from the top 8 largest mines in the world. So to be able to satisfy this demand, there has to be massive increases in copper exploration and development, and it needs to start today. Northisle Copper and Gold has almost 9 billion pounds of copper equivalent resources at the project and has the opportunity to grow further as we go after more targets. We are right in the sweet spot of the cycle as we aim to be in production well within this decade. The other important commodity here is gold, which acts as a currency, so therefore can provide a much lower cost of capital for us and an attractive financial tool. Approximately 35% of our revenue would come from gold, which is approximately 100,000 ounces a year for 22 years. To put this in context, if there was a stream placed on this with a 5% cost of capital at analyst consensus pricing at $15.50 and $400 per ounce of ongoing payment, that would be worth US $1.2 billion. So this is not an insignificant amount of gold that we have and could more than pay for the initial capital expenditures of the project. The last point about the stream really does speak to the quality of our project. We completed a preliminary economic assessment in March that yielded an after-tax net present value of over $1 billion at an 8% discount rate. This includes production of approximately 150 million pounds of copper equivalent per year for 22 years with an IRR of 19%. Copper prices used in the study was about $3.25 per pound, which means that the incentive price for moving this project forward is well below that number. We're progressing a fully funded 10,000 meter drill program spanning across 100% owned 50-kilometer porphyry district, which is oriented around several attractive targets, which we have the potential to increase our resources. So lastly, cost could be in the lowest quartile globally, which is mainly attributed to the excellent existing infrastructure provided by a historical BHP Island copper mine that sits adjacent to our property, and that was in production for 24 years. This project is not only attractive, but extremely significant as it relates to what the world needs: exploration and development of new copper projects. As I mentioned previously, the assessment of risk, which speaks to the developability of a project, should be one of the main considerations for investors and strategics alike. We believe that our location in British Columbia provides us with a clear path towards permitting, and our approach towards sustainability would give us the social license to operate. The area of the project is a very close site.
Hey, Sam, I think you just went over slightly over 3 minutes, so
Okay.
I must apply the same rules to you as applied to JC and Mark.
Understood.
Absolutely fantastic pitch. But what do our investor judges think? Let's first of all go to David Bellingham.
Okay, Sam, thank you very much for that. What's your capex on the project?
Capex on the project is 1.1 billion US.
And what's your market cap?
$50 million.
And your PNAV at the moment?
0.1 times NAV on analyst consensus based on 2 analysts, Chris Thompson at PI and Michael Gray at Agentis.
Okay, so you obviously need a re-rate to get this thing going. You're going to be doing lots of drilling, and your deposit is quite low grade. So more drilling will just emphasize what you've got, which is a huge project, which is low grade. How are you going to get that re-rate?
Sure. So 2 things about the low grade. We are actually at the average grade of BC copper mines at 0.41% copper equivalent. So from a BC perspective, it's not low grade. It's at quite average grade. But your point is well taken. What is the exploration catalyst that is going to create value in the near term? So as I said, we have 10,000 meters drill program centering around 5 exploration targets. Of those 5, only 1 is focused around expanding tonnage, not grade, which is the Hushina deposit, which is our large 900 million ton low grade deposit. So the other 4 are range from either greenfields exploration, blue sky, to deeper, higher intensity porphyry systems. And then finally, the Red Dog deposit, which is our higher grade deposit that informs the first 6 years of the 22-year mine life. If we could expand that to 200 to 300 million tons, that in my mind then justifies a starter pit or potentially a standalone pit. And so 8 drill holes of the total drill holes for this year is going to be focused on Red Dog, and we've initiated that just a couple of days ago.
Okay.
Thank you. One more question. You were saying that if you monetize the gold stream on this deposit, you were saying it's 1.2 billion. Is that in situ? Or is that what you believe you could get?
That's based on 100,000 ounces. Yeah, it's based on 100,000 ounces of recovered gold. That's after a 50% recovery for 22 years, which is what the PA has defined.
Okay. Okay, so potentially if we're going to halve that, given that that's what you'll get from the streamer because they like their returns, how would the project look if you didn't have the gold as byproducts? Like if you'd paid for half of the capex or whatever from a stream and then you just had a copper project, what would it look like?
Yeah, so I don't think the streamers would have that because they use a 5% discount rate, which is extremely low cost of capital, pay 1 times NAV, and pay $400 last money in. So we would never do a financing like this until this was effectively the last money in a la Pretium and Werstiuk. But your question is a good one. Would we ever do 100% of the stream? There's no way we would do 100% of the stream because it's too valuable. If we were to cut it to 50% or 25% of the stream, what is the impact on our overall cost? Because obviously it informs our byproduct costs. Well, the fact that we did the project at 325 copper gives us a lot of leeway and a lot of room if copper prices are $3.50, $3.75, $4. So for example, our project NAV increases by $300 million every 25-cent shift in copper price. So if that's keeping everything else equal. So at $3.50 copper, $300 million of value is surfaced by this project, which gives us a lot more room to consider how much of a stream we want to sell. Again, last money in, down the road, not today. The other consideration is, if you were to back calculate our implied discount rate today based on what we're trading at, we are actually discounted at about 20%, right? So if you think about that, if a streamer is willing to pay you 5% cost of capital and the market is only willing to pay you 20% or willing to pay 20% discount rate, then that is an accretive transaction, that a deal I would do any day. Again, last money in, not today. So there are multiple options and alternatives to financing these larger project capital. If you do have premium product, in this case, it's gold. Our gold byproduct is absolutely integral. And if you have clean concentrate, which is a huge component of this project, we do have clean concentrate, low deleterious elements, low arsenic, which is very valuable to the smelters. When the smelters come engage, they want to participate at any level of the capital structure, be it project level, be it equity, whatever it takes to get their hands on this offtake. And that brings another very low cost capital of financing.
Okay, I'm going to go and go to the other sort of judges now. Perhaps in the interest of time, I can ask for one question from Joe, followed by one question from Florian, followed by one question from Miranda. Joe, what's your question?
Yeah, thanks. Okay, so the drilling interests me, I guess, in terms of improving the mine plan. I don't think you need another ton in terms of having 940 million tons and 3.6 billion pounds of copper and 6.4 million ounces of gold. But so how do you change your grade profile? Like, what is it, the first 3 or 5 years are the payback period? And how different is that from your resource of 0.15, 0.2% copper and 0.18, 0.24 grams per ton gold? How is that much better? Is that twice as good, or is that 25% better, or what is that?
Right. Okay. So you're talking about Red Dog, the deposit that informs the first 6 years of the deposit. Red Dog is approximately 40% better grade. It's a much better strip ratio too. So that's the other thing I didn't say, is that the strip on this on a total basis is 0.7 to 1, which is one of the lowest in BC. The gold, the Red Dog portion of it rather, is less than 0.2 to 1 strip. So it's clearly a very interesting deposit from a grade and strip basis. And so I think that you're right. That's one of the 5 programs that we're focusing on, which potentially can increase grade and potentially can define the configuration of the infrastructure for where we put the mill and the tailings facility, et cetera. The second one is, I would call it more blue sky. So we've just finished a program on Pemberton Hills. This is a much larger system, much deeper system. You know, think Timok, think Resolution, think, you know, very, very, very major type focused system with deeper deposits. It's obviously harder to get to, much more costly, not only from an exploration perspective, from a development perspective as well. This is, you know, we're purporting that a 6-year time frame for our Northisle project. These types of deeper deposits are like a 15-year time frame. But if with depth comes intensity and bulk and tonnage and grade. And so while, you know, we have to wait until the results come out, we actually, you know, that's another perspective area that we believe that majors will be interested in continuing this program, obviously with our assistance and with the prospective starter pit, which we believe very strongly is in our purview to develop ourselves. And then there are 2 other satellite deposits that we're focusing on that are effectively new discovery areas, Northwest Expo and Goodspeed, which at this point, it's too early to tell whether we're going to get higher grade or not. But this is a 50-kilometer porphyry region with these massive lithocaps that just bubble out of the surface. If any of these things were identified in Chile, they would be drilled like Swiss cheese. The only reason why they're not right now is because there is quite a bit of top cover in the area that we're in. But
okay, hey, sorry to just intervene there, Sam, but we're just over the 8 minutes mark. Sure. So, but thank you very much for that. And sorry, apologies to Florian and Miranda, I wasn't able to get around to asking you for your questions, but I think that David and Joe asked quite a few in-depth questions there. So hopefully you've got enough information to sort of go in order to go and make your investment judgment. So that was 3 fantastic projects that we heard from. This is a bit of a recap while the judges get their notes together. We heard from Mark Ashcroft, President and CEO of Aurelius Minerals, followed by JC St-Amour, President and Chief Executive Officer of Vanstar Mining Resources. And then we just heard from Sam Lee, President and Chief Executive Officer of Northisle Copper and Gold. So I'm now going to go to our 4 investor judges in turn and say, if hypothetically they had $1 million, which project would they go and allocate it to and why? And as I mentioned at the start, if they so wish, they can allocate it to 2 projects and make it $500,000 each. So first of all, I'm going to go to Miranda Werstiuk. Who would you give your $1 million to?
Thanks, Andrew. Thank you, gentlemen, all for those really those good presentations. Given the investment thesis and model and strategy of OCIM, I would put the $1 million with Mark at Aurelius. You've got you know, a path to production. You've got you know, a resource model coming next year, and then a PEA, and then subsequent milestone events. You know, the way we look at from OCIM is as we've talked, is short-term prepayment. So definitely we would want to support the evolution of Aurelius to possibly get to that point. Thanks.
Okay. Thank you very much for your vote and your explanation, Miranda. Next, let's go to David Bellingham from HCF International Advisory. Who will you be giving your 1 million virtual dollars to?
Thanks very much, guys. Very good presentations. I do like the royalty and project generator model, but I didn't find there was enough substantiation to come up with a valuation that would allow me to go into that. So I am a bit like Sam, I guess. I'm a bit of a banker. I'm a bit with numbers. And ultimately, I think that while there's a big leap to get from the market cap to build the project, I think that the risk reward, whereby it's now at currently 0.1 PNAV, I think there's a lot of upside there. And it seems like Sam has a good handle on how he's going to raise that equity and raise the entire capital to build this project. And also I like copper.
Okay, so just to clarify then, David, that's 100% your money to Northisle Copper and Gold, yeah?
It is.
Okay, excellent. The next judge I'm going to turn to is to Florian from Midas Touch Consulting. Who will you be giving your 1 million virtual dollars to?
I will give it to Aurelius, simply because I believe they currently have the best risk reward. When I look also at the charts, I like Northisle, but it's up to 2000% over the last 14 months. And I think the whole copper cycle just topped out and will take a few months until we probably get a good buying opportunity in terms of copper stocks again. And it seems the market treats that stock more like a copper stock than a gold stock. So I would go for Aurelius. Vanstar I also like, but I think given the fact that IM Gold is on board and also looking simply on the chart, I think the best risk reward is with Aurelius.
Okay, so that's second vote for Mark and Aurelius Minerals. And finally, can I turn to Joe Mazumdar from Exploration Insights? Who would you like to give your 1 million virtual, your 1 million virtual dollar, 1 million worth of virtual, 1 million US virtual dollars to?
It's not real?
Unfortunately not. I
just wasted an hour on not real money?
I know. If I had like a real $1 million, I don't think I'd be sort of here, but I'd be sort of like sitting on the beach. But I am here, so who would you like to give your $1 million to?
Okay, I like Vanstar. I would have lent toward them, but I think it's sort of like a growing proposition with what IM Gold down. It's sort of, I think that they're sort of looking at what IM Gold is doing. I would put my money into Northisle just because from what I'm seeing about copper projects around the world and the difficulty in actually getting them into production and the problems Rio Tinto is having in Chile and Mongolia and Resolution in Arizona, a lot of companies are turning to BC and will put up with the grade as long as the infrastructure is there and it's permittable. So yeah, I would think that a project like this in this cycle may do well. So yeah, I would lean towards Northisle.
Okay, excellent. Well, I think we've run something like about 15 mining pitch battles this year, and this is the first time that we've had a tie. But I'm not going to sort of like ask for any adjudicating votes. I'm quite happy to have a tie. It's always good to have like a tie every sort of like now and again. So all that remains me to do is to go and congratulate Mark, congratulate Sam, but really to thank all three of our participants. They are really three great projects, and I thought really three great sort of pitches as well. Very, very succinct, full of some fantastic information, and certainly would encourage everyone listening in to go and check them out. I'd also like to thank our 4 investor judges who asked some really fantastic, incisive questions. And I'd also, of course, like to thank you, the audience, for listening in. This is, as I mentioned at the start, this is the first day of our 3-day online global event. We've got some other great content coming up, and we also have 2 more mining pitch battles taking place on the 23rd and on the 24th. So without further ado, I'd like to thank everyone for their time and go and see you again soon.